Hi everyone, welcome back to Be Rich. Kesav is here and he's wondering from our last video how we ended in a cliffhanger. Why is recession good for us? Why is the stock market collapsing is good for an investor? Kesav thinks I'm crazy for suggesting such things, and he's looking at me like, tell me the secret sauce. What is Warren Buffett doing at these moments, which is the right thing as an investor to do?
Yeah, sir.
Correct?
Yeah, sir.
Right. So let me explain to you. First, let me talk about only Indian stock market because that's the only stock market we are investing in right now.
Okay,
We're
sir.
not very well versed to go abroad and invest everywhere else. Indian stock market, NSE, right? So let's take a period of 20 years.
Okay, sir.
Okay. So let's say in the year 2007. 2007 is how many years ago?
27, 14, 21, 20 years, sir. 20 years before.
10 add panna, how many years you coming to? 2007 plus 10 is?
2017.
Plus 6? 2017 plus 6?
Sorry, sir. Sir, now 7, 14.
No, you guys get very angry with me when I point it out to him. But he's being so lazy. You tell me as an audience, what should I do when Kesav is so lazy to do mathematics?
Sir, now.
I understand you guys feel upset when I tease him about something like India and all that. But in these moments, when I just ask him to do subtraction of 23 minus 7 and he comes out with an answer 20, whatever he feels like it, he pulls out of his hair and he gives it to me. Should I just say, okay, Kesav? Okay, sir. Should I say that? I will follow your advice.
Sir, not like that, sir. I did the multiplication, sir.
Lunch was very heavy. Huh?
Not like that, sir.
Sun is very hot. Huh?
No, sir. I tried to give the answer fast, so
Don't.
I did some wrong calculations, sir.
Good excuses you have. Your girlfriend will find you very hard to catch you. Because every time she'll ask you, where were you? Where were you? And you'll come out with this kind of excuses. And she'll find it very hard to argue with you. Like how I find it very hard to argue with some of the stuff you come out with. Anyway, coming back to the point, 13 years.
Yeah, sir.
How many years? 13? 16?
No, sir. No, sir. 13, no, sir.
Hey, 16,
sir.
correct.
16.
16 years ago. Let's say you started investing 16 years ago. Right? You're doing index fund. And you come to today. That means your average, if you take the price, back then it was around 6,000. The NSE.
Before 16 years.
Yeah, 16 years ago it was 6,000. Today it's come to 17,700 about. So that's about 11% it's growing. Okay? Let's say, Kesav, because you're lazy, you're very lucky. I fought with you for 2 years. Instead of 2007, you only decided to enter the market. After much fighting and crying, you finally like, okay, to hell with you, and you enter the market in January 2009. How many years is that?
So 16 means 14 years, sir.
Correct.
14, correct, sir.
Don't have doubt, man.
I don't
do
have
the maths
doubt, sir.
correct. I will not say anything wrong.
Sir, you were like this, so I thought.
How else you want me to look like this?
Sir, okay, sir. Okay, 14,
right.
sir. 14
14.
years.
14 years. Right? The market Sensex at that time was what? You know what? 14. It was around 3,000.
Okay.
And if 3,000 it invested, and now it's 17,700, you know what your average return instead of 11% will be?
Also.
38%.
Okay.
See, just a matter of 2 years. And what happened in those 2 years? The stock market
collapsed.
The
You
global recession of 2007.
Yeah, sir. You have said it so many times. On 2008,
recession happened. Global banking industry came to a halt. Across the globe, economies collapsed. Stock prices went down.
You said it so many times.
Yes. And if you had money and you put your money in that time, just in the index, I'm not even saying stock picking.
Okay.
Just on the index you entered and you're investing on the index, your return will be 38% compared to average of 11%. That is why recessions are good for an investor. Even a simple investor who's doing index funding, index against, mutual fund, index, sipping, as Anand says, you're doing that, you'll see much handsomer returns. So when you enter the market is crucial. And the best time to enter the market is when the stock market collapsing.
Okay.
So when is the best time to buy phone?
In the price of yeah, sir.
or right before the next model is coming. The old model will be going very cheap.
Yeah, sir.
Correct? Unless you are always wanting the latest, then you'll never buy.
Okay.
I'm not like that. I always wait for the new model to come. Then the old model will be going half the rate. Because everybody wants a new model. Old model is still good. Nothing wrong with it.
Then you buy the half price.
So I always buy the one iPhone older or 2 generations older. Because it's less money.
Understood.
And I get still all the features which I need. Understood?
Sir, for this recession only Warren Buffett said the blood is...
Yes. When blood is in the market, you should be on a buying. When everyone is feeling greedy, you should sell and get out. So that's what a lot of big investors like Ray Dalio, Buffett and everybody are sitting on the fence and waiting. Because they feel, looking at the cycle, the economy goes like season. Rainy season, summer time, like that. And you can only predict the season roughly.
Okay.
Like our farmers in Tamil Nadu, they expect rains to come in a certain time. They put the crops, rice, paddy field, they do, because they're expecting rains. If the rains come a little late, it's tough. If it comes too early, it's tough. So they expect it to come roughly. Same way, nobody knows when the market will go down all the way. When the bottom is reached, they do not know. But they try and wait. So right now, having cash is king. You know why cash is king?
You said if we have a cash in hand, we know when are we spending.
Don't.
How much we are spending.
No. When you have cash, only you can buy it.
Okay.
If you have spent all your money in the movies and eating BDs, right, you will not have any money to buy the stock and the market collapses. So people like Warren Buffett and everybody are holding on to their money.
Okay.
They're holding on reserves. They're keeping a war chest, as Anand says, to invest and deploy. The reason why they're waiting is they're waiting for the correction to happen.
Okay.
Now, what are the things you look at when the correction happens? Let's say you are also wanting to do this. You have your pot of money and you're ready to invest, and you've got your money ready to invest and you're waiting to. So, what is the things you look at for a company to invest when the recession comes? How do you pick? You've spoken about this.
We have spoken about that, sir. Okay.
My effort is always this case, sir. No, like a broken record, no?
Okay.
I don't know if you know what a record is. You know what a record, LP is? Record? That black disc, you play, music will come out of it.
Yeah, sir. I know,
Gramophone.
sir. Yeah, sir.
Correct,
Come
I
on.
said it
I
correctly.
know, sir.
When it's broken, you know what happens? It will skip back to the same part.
Okay.
It will play one loop, then the needle will skip and it will play the same loop. It will be stuck there. Wang, wang, wang. Like a dance beat, no? Like jig, 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 like that.
Understood.
It'll be stuck there. Like that I am with you, man. I tell you the same stories over and over again. But you're improving. You're starting to remember more and more. So the most important thing is durable competitive advantage.
What does that mean?
The company should have durable competitive advantage. Let's take the case of Star Biryani. Do you know what Star Biryani is? You've been to Ambur?
Ambur Star Biryani, I ate, sir.
Yeah. Nice, no?
It's so nice, sir.
Very nice. Way back that guy started. He was one of the first famous biryani shops of Ambur. When you hit that road, going to Bangalore and you need something to eat, you land there at lunchtime, everybody will be in Star Biryani.
Star Biryani, sir.
Star Biryani will always be full. Not only you go to other biryani shops. His brand was that popular. He started opening here, there, down, up and down. Then people started copying his
recipes.
Correct? So he had a competitive advantage because he built a brand. So that is a moat. So that Star Biryani has a certain brand. All the guys next to him also make same biryani. A cook might have left Star Biryani and gone to that other shop, taken a job there. Right? He might even put up a board saying, Star Biryani cook is cooking here. But
the brand stays.
It does not. You understand?
Understand, sir.
Another famous one is Murugan Idli. You've gone and eaten Murugan Idli.
In Ananagar, there is one Murugan Idli.
It's famous.
Yeah, sir.
Okay. He started from Madurai, Coimbatore, somewhere he's come and he's spread out all over Tamil Nadu. He's gone into even Karnataka. There's nothing special about it. Just idli, chutney, sambar, podi. Everybody can make it.
But it tastes.
And he sells the dough also, the maavu. He sells that also. You can buy his maavu and he can make his own idlis. And you can say this is case of idli kada. He's Murugan Idli batter, but nobody catches on to it. Why? Because he's built a brand. That is a competitive edge, durable competitive edge.
Okay, sir.
That means no matter what happens, that brand stays.
Okay,
Coca-Cola is a very famous example. Warren Buffett invested in Coca-Cola. Everyone's tried inventing Coca-Cola. Coca-Cola is nothing great. It's a very simple formula. You can recreate it. That day, now with our day's technology, anybody can make one Coca-Cola. Just because you make one cola drink and you put queso cola on it, you're not going to own Coca-Cola. It's got a strong brand, loyalty.
Yeah, sir.
Like Tata's.
Ah.
If you see Tata and Reliance in India, people will buy Reliance, they buy Tata. But you say, who do you trust?
Tata.
They trust Tata.
Yeah, sir.
For some reason, no matter what Mukesh Ambani is doing, he's not able to get that kind of trust. He's trying. He's trying to create, that's why he created Jio. He's trying to move away from that brand, Reliance brand. He thinks Reliance is only having the bad smell. So he's creating Jio, the Jio atmosphere. And he's bringing Reliance, used to sell clothes also. Reliance Trends and all that. He's dumped all those brands and he's creating other brands. AGO.
AGO.
So people don't even know that it's Reliance. Till they go and see who owns the AGO. Oh, it's Reliance. Huh? You get it? But even then, he's not able to build that loyalty, trust. That is the secret sauce. So as an investor, you look for that.
Okay, sir.
Right? That is called the brand moat. And another thing which you look for is over a period of year, length of the company. At every year, lots of new companies come into business.
Yeah, sir.
Over a period of time, over the years, you see, those companies started this year, 10 years from now, most of them would have gone out of business. That's the nature of capitalism.
Okay.
100 companies start today, 10 years from now, out of those 100, only 2 or 3 will be there. So as an investor, you should be able to see which company is going to last. Okay. Not only should it have a moat. I've explained what Anand says, moat. Warren Buffett moat. I explained it. Brand, loyalty. Something special about that brand.
Okay. Which
nobody else has. Second is, will it last a long time?
Okay, sir.
Correct? So that you have to see. That you have to analyze as an investor. Correct? And another thing which you see is, once you've seen this, the company has been there for some time and it has a moat, then you see how has its earnings been over a period of 5 years, 10 years.
Okay.
The things which you have to see is, one is revenue, earnings per share, free cash float, then equity.
Okay, sir.
So these things you analyze. And each of these categories, year on year, should be growing.
Okay, sir.
Right? You take your Apple, any of these big companies like Tata companies, and you see year on year, it will be growing.
Okay.
That is another important thing you should see. Okay? And another thing is, once you have seen this, you have analyzed the moat and you've analyzed the share, is it growing? And once you have decided to put your money into it, the most important thing is you have to be willing to wait. You have to have patience.
Okay. For the company to grow.
Correct. You trust the brand, you've done your research, you should have belief in what you did, the calculations you did, the maths you've done, and the research you've done. And once you put your money in that, you should allow it to grow. Right? You plant your tree, you water it, and that's it. You don't stand next to the coconut tree every day and every minute looking at the coconut tree. Is it growing? Is it growing? Is it growing?
Understood.
Then you don't say, why isn't it? 1 centimeter has grown 1 whole month.
We have to give it the time.
You have to give it time to grow. Right? And stop looking at it from quarter to quarter and even year to year.
Okay.
As a long-term investor, to be like Warren Buffett, you have to leave it for 10 years.
Okay.
When you place a bet, see, you're investing at a time when the market is at its slowest. So now you have to allow it to bounce back and grow to the top. And that may take time. From 2009, when the market went down, to come back to those levels and to grow 10% from there, it took a very long time.
Yeah,
it will grow. Eventually it will come. But you have to be willing to wait. The biggest mistake all investors make, especially long-term investors, is they lose the nerve.
Okay.
They think they made a mistake, and before they can wait for that moment, before the flower blooms, they think it's not going to grow and they sacrifice the plant. It's just about to bloom. You understand?
Understand, sir.
So, waiting is that important. You should not bail out in your investments too soon.
We should wait for them.
You should wait. If you do this correctly, what you'll do is you'll create a compounding effect.
Okay.
Like, not like Nifty 10%, 12%. We'll create a compounding effect of 30%, 40%, like what I showed you.
Okay.
So let's say you bought ITC, correct? So if you had invested in ITC,
Okay.
correct, it would have been at 52, 53 rupees a share. And that would have grown today.
395, sir.
Yes, that's almost 600%. 607%. Even when it collapsed, it went down, remember, to 130, 100. Even then, you would have been standing at 100, 160%.
Profit. Okay.
Okay? That's the question of not losing your nerve. You make your bet and then you sit on it. And of course, ITC gives bonus, it gives rights issue. So, all those extra plus all the dividends you would have enjoyed. That all compounds far higher and far more handsome than any other. These are the multi-baggers.
Okay.
As a value investor, you always hear Anand saying what multi-bag. This is what it is. And you place your bets like this. And you get 5-6 companies, you place your bets like this and you sit.
Okay. Wait for it to grow.
Yeah. But these moments in life are few. How many times do you think market has collapsed like this in your lifetime?
I don't know, sir. I just heard about 2008 recession. Yeah, sir. Global.
When were you born?
2000.
You were born when the one bubble burst. .com bubble when it burst, when you were born.
2000s.
Yeah, 2000.
Okay.
Then after the first phone which you saw is this. Correct? In your lifetime, averagely, a human lifespan, you will see 1 or 2 recessions like this.
Okay.
Big opportunities. So there's another one coming now. Why am I telling you all the story? This Ramayana, Mahabharata story, why am I telling you? Why? Because an opportunity is coming.
Okay.
The storm is coming.
Okay, sir. When will it reach here, sir? But it's going
Again,
to come.
like I told you, farmer cannot predict the weather.
Okay.
But you plant the crops.
Okay.
So I'm telling you, Kesav, I'm going to be planting in my farm. I'm going to be planting like a good farmer.
Like that.
I see your farm. You're sitting there under the sun eating coconut trees. Okay, coconut fruit you're eating. I'm saying, please, boss. Enough loitering around.
Try to
get ready. Monsoon is coming.
Okay.
That is why last week I was telling you about cut your spending. Don't worry about investing. I'll tell you when to invest. But I need you to have your war chest. You understood?
Yeah, sir.
Only if you have your war chest ready,
then only
you can deploy it.
Yeah, sir.
So only if you have that war chest, you can invest. And you know Rakesh Jhunjhunwala, right?
Yeah, sir.
Correct? Do you know what small amount of money he started his whole thing from?
No, sir, but I heard about his Titan shares.
Yes. That is what I'm saying.
Oh.
He bought it. Those are the multi-bagger bets. But do you know how he started? He borrowed money from here and there and started with a very small amount of money. Go read about him.
Okay, sir.
I don't want to spoil the story for you. Go read about him. Anand doesn't like him very much. Okay.
Okay, sir.
That's for other reasons. But as an investor, he made correct bets and he became the Warren Buffett of India.
Okay.
But go read about him.
Yeah, sir.
How he started. All it takes is one small seed to build a forest.
Okay.
Every seed has a potential of becoming a forest. But you have to see it.
You have to wait.
All my effort is towards you seeing that.
Okay.
It's never too late if you start now. Understand? So cut your spending.
Okay, sir. We'll do that.
Okay. So I'll feel happy if every week you come and tell me, sir, I didn't go to this movie. Sir, I did not go to this hotel. Sir, I did not meet my friends.
Okay.
I'll feel very happy for you.
Okay.
Instead of you coming and telling me what is the latest movie you saw, or what is the latest restaurant you ate in, or where all you and your friends went loitering. You tell me I avoided all this, I'll feel very happy. That is good news for me.
Okay.
Of course, you make these grand statements to me saying, I like being alone.
Yes.
I spend time alone.
Yeah.
But your wallet is not saying that. Because a man who stays alone, his wallet will never feel so light.
Sometimes. Okay, sir. We'll
You're imagining that you like to be alone. That's a problem. Understood?
Understood, sir.
Chalo.
Okay, sir. Thank you for watching this video. If you like this video, hit the like, share and subscribe button. Don't forget to hit the bell button. If you forget to hit the bell button, whenever you post a video, you will not get notified. Thank you for watching. Be rich.
By now, everyone knows that the next location for our event is Singapore. I had not given great clarity on the date, time, and the place where the event would take place. We have now finalized everything about the event. The event is taking place at 4 p.m. on the 29th of April Saturday at Holiday Inn. There are several Holiday Inns in Singapore. Which Holiday Inn? We are meeting at Holiday Inn Singapore, Atrium, ANIHG. It's hotel, and it is at 317 Outram Road, Singapore 169075. Once again, I tell you, Holiday Inn Atrium. And my team will be pleased to help you. We have given a WhatsApp number below and we have given you an email ID. If you contact us, my team would help you. Thank you for watching. Be rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.